Difficulties. We're trying something new. Okay. All right, Bruce. Well, let me do what I normally do. We'll dive into a breakdown of what the markets are doing. And both Bruce and Lady D are welcome to jump in at any point and interrupt me if there's something you want to talk about.
Sounds great.
Okay. So, last week, what we were talking about was, the way the market is moving has been very, very tricky. Basically, since like the week of Thanksgiving, the market it has momentum on a daily context. So what that basically means is it is moving higher on a daily context, but it's a very slow melt to the upside. And intraday, it's been very, very tricky because the market has just been consolidating for long periods of time, then breaking, then consolidating again, and just really not giving you a lot to work with. You're like waiting and waiting and waiting to enter a trade. You finally get in the trade. You wait for 2 hours for the trade to play out, and then it goes against you. And then you're like, oh no, now I have to wait another hour. So it's very frustrating markets trading these tight ranges. I looked back, it's been like this the last few years. The 2 weeks around Thanksgiving tend to kind of do this, but hopefully this week things should kind of loosen up a little bit. The market should be able to get a little more volatility, a little larger ranges, and give us some better opportunities. Okay. So the first question I'm asking myself this morning when I look at the market is there anything that looks different to me from last week? And right now, currently, there is not. One thing that was jumping out at me last week when I was looking at the order book in Bookmap was these sort of huge random bits of liquidity that were above and below price. All last week, we consistently had, just like this, pre-market, 2 or 3 random levels above, maybe 20 points or so above price where there were these huge nodes of liquidity just waiting. That is still there. So the first takeaway from seeing that is we're probably going to test Friday's high, right? It was a poor high. It was also a all-time high that was weak. So there's a lot of reasons for the market today to want to poke up and test Friday's high. Okay. But the same thing I said on Thursday, and the same thing I said on Friday, I will say again today, which is what matters is not if it can get to the high. What matters is what happens when we get there. I think today, just like I said on Thursday and Friday, the best opportunities will likely be a look above and fail of that overnight high, of that previous day's high. So if the market is able to get all the way up to 61.11 and get new buying up there, I would be bullish, for it to keep going. I would have no reason to fight that momentum, but I just have a feeling we're going to get a look above and fail and come back down into the range. And the reason is because despite the fact that we've had momentum on the daily, we are running out of steam with that momentum. Okay. So there are signals that momentum is running out. Yes, we have higher highs and higher lows the last few days. That's the sign we still have it, but look at how close the value areas are to each other now. And look at the highs and lows the last few days. Okay. We had poor high, and then on Thursday and then Friday, we had a poor high and a poor low. So this is a sign that there really isn't any excitement in the market. There's not FOMO. They're not chasing, they're not like, oh my God, I have to go buy Facebook stock. There's no real excitement in this market where people feel like they have to go long. There's just no one going short. There's just no one who is fighting the momentum. There is nobody who is looking for that larger pullback right now. And so the market is just kind of stuck in these tight ranges. It can't do that forever. So the poor high and the poor low on yesterday and the value being pretty much inside of Thursday's value tells me this market is probably going to run out of steam. Not that it has run out of steam. I'm not saying I think we're going to get a pullback today. I just don't think we're going to keep going higher and higher and higher all week this week. So every day, my first focus is going to be when we get to the previous day's high, what happens there? Because if we can't keep going higher, eventually that thing's going to turn around and it's going to have a massive sell-off. So the first order of business for me this morning with the market is to see it as a chop zone, to see it as, uncertain between Friday's low, which is 60.90, and the overnight high, which is 61.06. Okay. Between there, I have to just watch and wait because it could pull back just as likely as it could go higher. If we get above the overnight high, That to me is an opportunity to go long, looking to take profits at the previous day's high. So if we get above the overnight high, we get support, we see new buying, that's a long to the previous day's high. I would not want to stay in it beyond that because I don't know that it's going to keep going. I think it'll probably look above and fail. If we get above the, Friday's high, if we get to new all-time highs and we get new buying, great. Look for another trade long. What are your thoughts on that, Lady D?
Okay, well, as you know, I'm NQ trader, right? So it's a little bit of a different story on the NQ. So I don't know if you want to share my screen or
Yeah, I can
let
share your
people
screen.
see my levels on the NQ, but I agree with you completely. I think the last few weeks we have seen these really tight ranges that take hours and hours to resolve to one side or the other. It's just been kind of mind-boggling. But the one thing that I will never forget that I learned from Jill Dalton is like, you'll be surprised how far they can push it. So never ever be early, or don't fight the trend, and don't, even if you think it's going to turn around, don't be early. So what I do in this situation on days like today, especially where, yes, we have a pour on the NQ, we had a pour high from 12.5. Then we have this really large buying tail. I had another coach in trading once, I thought this was so funny. He explained about these long buying tails here, like this one we see right here. Let me see if I can circle it with my Epic pen. But he basically says, do not cross. Like this is just really solid buying. I mean, we single printed out of the overnight range, out of the previous day's range quickly. So I knew only to take long trades. But today I would be very cautious. I'm watching this afternoon pullback low right here on the NQ, which is at about 21,571. That is an important level. As long as we stay above that level on the NQ, I'm still going to be bullish. If that level breaks, we might come back and repair, like you said, this poor high there. And it's also exactly the same level as that afternoon pullback low. So I think that's a level we need to kind of really keep an eye on today. If that breaks and we start filling in some of these single prints, which the way my teacher described it, it's like when I first started trading, he said, just imagine you're a toddler and you don't know how to read stop signs. You don't know how to read yield signs. You're just a toddler that wants to run across the street. Because you don't understand those signs, you're going to take off and get run over by a car. And he says it's the same way in the market. Like if you don't understand where those warning signs are, the street signs, you're going to get run over. And so he taught me, like, whenever you see a big buying tail like that, or large area of single prints where it's obviously only buyers, he's like, don't run across, like, don't take any trades in those areas, because you're just going to get run over. Until you learn, as you get better at trading, you learn the signs of where to be more cautious. He also taught me that in situations like this where the volume is declining, we keep seeing higher prices, but the volume is starting to get it's going down. And really, if this was going to continue going, we should see more volume, right, Charles? I mean, if we're going to hit new levels, the volume should increase. So the fact that
You're talking about the momentum up. We should be bringing in
yeah,
more
if it was
volume.
going to keep going up, the volume should not be decreasing. So when I look back at the last few days, the volume has slightly been decreasing. Therefore, what I do in this situation, I'm still going to stay bullish. I'm still going to look for trades in the trend, but I'm also going to reduce my position size, maybe trade micros instead of the minis. Like, I'm going to be much more cautious. I'm also going to be careful with my stops, and I'm just going to take smaller positions. And that's how I deal with this kind of situation where we're at right now, where it's blue skies. It's getting very risky, the atmosphere out there. We also have a couple unfilled gaps below. Whenever there are, obviously after 2 gaps, 3 gaps, to me, that kind of signals euphoria. It's probably the laggards, in the dispersion model, and I don't want to get involved in that. So I would say today I'm probably going to sit back mostly. I won't take that many trades, and if I do, they're going to be small scalps and they're going to be small size.
Very cool. It's great advice.
What are your thoughts
looking
on that?
for those roadsides.
I think it's important for people to understand how, in a situation like this, how we manage the risk, right?
Mm-hmm.
I mean, obviously, we're not going to go all in if we're seeing signs of decreasing volume on higher prices, right? We're seeing a lot of consolidation. I mean, I think I marked this flag, but now I moved it. I'll mark it again. Hold on a second. There's just a lot of price consolidation happening that's taking hours. Like here's one of my flag patterns that I generally like to trade from the end of the day, right? It looks like the market tried to spike in the M&N period, but it couldn't. It never got above the daily high. So that's also something I'm watching. I think if the buying was really strong, once it broke out of this all-day consolidation era, we probably could have seen a spike or would have seen a spike, but we didn't. And we also have a really large prominent point of control here, which is very likely to get revisited. So that's my 2 cents on what's going on in the NQ.
Awesome. All right. Well, let's ask Bruce to join the conversation.
Yeah.
So Bruce, I'm curious to know, because you're much more of an expert on Bookmap specifically, right? When you're having markets like this, where they are, extremely choppy, extremely hard to read, they make it look like they're about to do something. They make it look like they're about to break higher, but then they completely reverse. Are there things that you look at in Bookmap that kind of show you when the behavior is unusual and tell you to be more cautious, or do you like those opportunities?
Yeah, I mean, I think a lot of times what you see or what I have seen is some pretty massive order flow shifts and changes with a lot of liquidity or potentially a lot of absorption. Also, a lot of icebergs that might be filling in certain areas. We haven't really seen any sort of like, what Lady D had talked about there with that longer tail and that push up. I totally agree. I mean, don't fight the trend. Like, that they're telling us something, and you're going to get run over. However, we may see some sort of shift, and we may like gap down someday below that, and then it's a very different story at that time. As it is right now, like it's just kind of chopping around, trying to kind of figure out. It kind of inches higher, and it's kind of a nervous time. I kind of feel, the order flow is just kind of, you can look for small little pockets here and there. On lower time frames, basically, not the bigger time frames that typically you guys are looking at.
Yeah, I agree. It's become a scalpers market. That's what's happened. Is that like?
For sure.
It's just scalpers. It's like it's great if you're looking for a 3-point move. There's a lot of them, but if you want to just get in a trade and sit and wait a few hours and have it move 20 points and take your profits, like, man, this market will stop you out 100% of the time first before it makes that bigger move.
Yeah. It's and it kind of get in, get out, take your money, get in, get out, and look for the next. Or maybe if options traders out there, I mean, this can be a great time to get some strangles or something to kind of capture maybe some time decay.
Yeah, for sure, 100%. So there was a couple things that we wanted to talk about with Bookmap that you guys got coming up. There's a trading competition that starts tomorrow, right?
Yeah, that's correct. So
can they still sign up today?
Yeah, absolutely. Today is the last day. So please sign up. I don't know, Charles, maybe you have the slides for the competition and the Cyber Monday deal.
Oh, I don't know if I still have those ready. Nope, that's not it. There's the Cyber Monday deal.
Okay. And
I don't have the other one on this computer. But it's just competition at bookmap.com, right?
Yeah, competition.bookmap.com. Yeah. What's great about it here is, I think the competitions are awesome. They're a lot of fun, and you can test out a bunch of stuff. But this is only for Bookmap subscribers, this one, so we've never done that before. However, if you have like global, you'll get global plus included. You will also get, if you don't have futures data, you will also get that for free for the competition period. And the nice thing there is just below where it says competition there, featuring the MBO bundle. No, I'm sorry, it's up there. Yeah, featuring the MBO bundle. So you will get free access to this. So a lot of people have asked about this, to kind of kick the tires. Can we try out the MBO bundle? Here's your chance, and play around during the competition. Like I had mentioned, like during these kinds of times, you'll see like, maybe a lot of absorption by larger players using iceberg orders, and a lot of positioning at some of these times. And you have free access to it. So check it out, try it out, see if the stops and icebergs is something that works well with you.
Yeah, for sure. Yeah, I would say if you haven't experimented with Bookmap, this is your chance. It's free. You get the data too, so you don't even have to like pay for extra data or anything. Give it a try and experiment with it. Those stops and icebergs were a game changer for me. Now, it's not that I enter trades because of stops and icebergs, but they help me to understand what's happening when I'm confused, when I'm like, what is going on right now? Why can't the market move lower? Why can't it's like, and then all of a sudden you see, oh, there's an iceberg that's absorbing every attempt to move lower. Or maybe you see there's an iceberg above price that's been sitting there and it hasn't been tested yet. And the market just wants to poke up and test that iceberg first, then it's going to make the move. So if you haven't messed with the stops and icebergs, it is well worth experimenting because it's an edge for sure.
And can I just jump in for a second, Charles?
Of course.
Yeah, I just want to mention that, talking about where we are with these levels and what we're looking for. I mean, I think it's important. The market's not just going to turn around and, automatically. It's gonna stay in a tight range for a while. You might see like an inside day or maybe an outside day or an inside balancing day. I mean, it's not just gonna make one move one way or the other. Like, especially if it's about to turn around and possibly change directions, you want to look for, signs that it's retesting lower levels, it's retesting higher levels. Look for that. When you see an inside bar or an inside day, that means the market's not so sure anymore, right? So that's the moment you wait for that sign before you start to think, okay, the direction, the up direction is coming to an end. It's probably going to go to another long balancing area, 5-6 day balance area first before, so I just wanted to throw that in there.
Yeah, and that's one of the things that's been tricky about the market lately, right? Like there was an example of that last week where, we left behind, we had this massive move to the upside on, it looks like it was 1128. We had this massive move to the upside where we left behind all this weakness. There was a million reasons in the world for the market to pull back. The next day, we just kind of went sideways at a higher price. So on that day, all my signals are telling me, okay, this thing's running out of steam. It's not going to be able to keep going. The next day, we had another day just like that. And we even made lower lows and lower highs. And so it was like, yep, this thing is definitely running out of steam. I don't know if it's going to go sideways for a while and stay in a range here, or if it's going to pull back in price. And then it immediately gaps up the next day and has a massive trend day to the upside. And you're like, what is this? Like, this doesn't make any sense. So yeah, you got to be very fluid in these markets these days because these computers, they specifically make it hard to guess ahead of time what's going to happen. They make it look like the opposite is going to happen. And then boom, they do the opposite. And it's like, you're like, oh, fuck. And you got to change quickly your understanding.
Yeah, for sure. Well, I can show an example of that if you want to share my screen on Friday, because, in our brigade stream, we've been talking a lot about consolidation patterns and that kind of thing. That's things I like to look for. But yeah, so we had this flag here. All the signs made it look like it's going to break to the upside. Obviously, there's players accumulating positions here. But what did they do? They broke it down first, and then they tried to go higher and they couldn't. So, these are all things too that I'm taking notes in my notes and my logs, and I'm keeping track of these little Jim Dalton would call nuances, right? I'm keeping them in the back of my mind just to help me try to understand exactly what's happening at these levels,
Mm-hmm.
who's in charge, and what are they doing.
There you go.
Yeah.
Very cool.
Yeah, I mean, it just doesn't seem like anyone is like you said earlier, Charles. They're just not selling,
Yeah.
you know,
Sellers.
but they're not necessarily eager to buy, like you said as well. But people are just holding.
Yeah, it's a conversation we've been having for a while here in the brigade, but it's like, because the bigger players, the bigger market participants aren't using stocks and futures anymore to make their bets on what the market's going to do. They're using options and they're hedging with stocks and futures. It has just totally changed the way stocks move intraday on a day-to-day basis. And so, yeah, this to me feels like, even though technically the market went up last week, it kind of felt to me more like it just went sideways, more like it just was consolidating for a week, trying to decide what's next. So I don't want to come into this morning feeling crazy bullish because I'm like, well, we were trended higher all last week, we're going to keep going. Like, no. So that's why I say a test of the all-time high, totally in play. Much beyond that, we'll have to wait and see.
Mm-hmm.
We could still be consolidating. Very nice. Well, no real comments from the chat. Just people letting me know they can't hear us. Doing my best to work on those technical difficulties. All right, so you're sitting there and you're saying to yourself, okay, Charles, I hear what you're saying. You see the market as a chop zone, so above Friday's low, there's nothing for you to do until you get more information at the low. Below the overnight high, there's nothing for you to do until you get more information at the overnight high. What do you do in the beginning while the market is just grinding around? So we expect we're going to spend the first half an hour, maybe the first hour of the day today, chopping, grinding up and down between 6107 and 6090. How do you make money in there? The answer is I don't. Like Lady D said, when I open up a chart and it looks like this, where we just consolidated the whole previous day, we consolidated the whole weekend long, at market open, I'm not looking to enter any trades at all, right? I'm just like, let them keep consolidating. Sure, it might go up 5 points and come down 8 points and go up 7 points and come down 4 points. And yes, technically you could scalp and make little bits of money here and there, but you're really just guessing where it's going to reverse, when it's going to reverse, how far it's going to go. There's really no edge in that where you could consistently do it every day and always get the same results. So that's why for me, I see it as a chop zone, because waiting for support, new buying above the overnight high to go long, targeting the previous day's high, that is a trade I could do every day. And it will work out more than it won't. As long as I'm good at reading the market and I'm good at knowing when I see support, it will work more than it won't. And that is a consistent type of trade that you could take. Same thing with a look below and fail, or look below and go of the previous day's low. If the market gets down to Friday's low and it gets new selling and you go short there, that is a trade you can make money off of most of the time you do it. As long as you're right about seeing the new selling, you'll be able to make money off that trade most of the time. Right? Same thing with the fail. If it comes down and it doesn't get that new selling and it turns around and comes back up and you go long there, targeting a move back up, again, you will make money most of the time. No matter what kind of day it is, no matter what the market is doing, if you wait for those opportunities that have an edge, you'll make money more than you will lose it. And Lady D's got a cheeky smile. What's going on, Lady D?
Well, I'm just thinking, so what I kind of have a little bit of a rule in the A and B period, especially on days like today, we're opening inside the previous day's range. We know it's going to chop around for at least the first hour or first half hour. But I do, as a scalper, I do have some trades that are generally really profitable. And that's just the first time we get to the overnight. So the main reference points, like the overnight low, the overnight high, or the previous day's high, you can actually fade those there's usually a little bit of a bounce before it's actually going to take that out.
Yeah, you're talking
So,
about like within a point of the actual low.
yes.
Yeah.
Hmm.
I never have the courage for those, but you're
Oh,
right. You do almost always get a little
track it.
bounce for at
Yeah,
least a few
log it,
points.
track it. You'll see it's very profitable. I actually, yeah, I'll show you guys. This might be really interesting. My son, who's like, he's kind of a genius. He creates all these spreadsheets for me, and he tracks like the strategies, and then at the end of the week or the end of the month, I can see like which of my strategies work the most, and then I can focus on perfecting those, and that just keeps increasing my edge. So I think it's important to always, really track those things. I know it's scary to do, Charles, but it's kind of like the poor high, poor low.
Mm-hmm.
Same thing. Those never get, as you were always talking about this in the brigade, how it's going to retrace from the poor high or the poor low, but then it usually will come back to correct it. But you can usually take that trade too on the poor high and the poor low, and you can get a short bounce before it takes it out.
Oh yeah. I'm happy to take those trades in the
Yeah.
afternoon. Right.
Yeah.
Like once I've watched the market for a few hours and I know, okay, this is one of these range bound choppy markets, then I'll get into a trade like that. But like in the first hour where it's like, this thing could liquidate at the previous day's low. Yeah, no, I'm too scared.
Yeah. But let's talk about too, then, the IB, the first hour, because I really, from my research, I've noticed that, there's a big correlation between whether the IB is extra large or whether IB is in, a very tight range. That actually can predict kind of what kind of day you're going to have. For example, on Friday, we just had a massive, A period. Like I said, we had this massive buying tail. The IB was fairly large considering, and then we went nowhere the rest of the day, right? Whereas sometimes I've noticed that if the IB, for example, the day before on 12/5, the IB was pretty, it was a tighter range, right? So you did have kind of a large breakout in the F period. I mean, I basically feel like there's usually really one really good trade a day.
Mm-hmm.
And I think what I've learned over my years of doing this is just how to be super patient and wait for the one opportunity. You might have to wait hours and it might come in the A period, depending on if there's a gap or if there's, what the circumstances are. But yeah, so.
Yeah, if you just go back, like, this is what I encourage everyone to do. Before the market opens in the morning, make a trade plan. Decide, how would I trade this? If it goes to this level and it does that, what would I do? If it goes to here and it does that, come up with every possible scenario you can. Trade throughout the day the best you can. And then go back in hindsight. Once you've seen how the day ended up playing out, go back and rewatch it.
Charles,
and almost always, at least for me, I find it's like,
I don't mean to interrupt you, but share my screen for a second.
Okay.
About this on the NQ.
Okay.
So look, we exactly at the overnight low, what happens? I would have faded this, and look where we are now.
Oh, you're talking about, the trade today.
I mean, look at that massive bounce from the overnight low, right?
So
Most
are you
people
saying
thinking,
pre-market you put in a limit buy order at the overnight low and the previous day's low?
sometimes, yeah, not all the time. It depends on
Yeah.
the surrounding circumstances. But yeah, I usually fade. And look, and now we've got this big volume area right here, and we've already kind of booked through that. So I just wanted to show this because we literally just talked about this 2 seconds ago. But if you faded the overnight low, you would have made a lot of money.
There you go. Well, disclaimers.
Yeah,
these are not trades that you should take. These are trades that D takes.
Yeah, what works for me doesn't work for everyone. We know that. We've talked about in the brigade a million times, but now we're coming into some resistance now in the overnight, see? So I would get out. If I were in that trade, I would be getting out.
There you go. And you could almost use Friday's high as well. It looks like it'll probably get another, because the overnight had some consolidation there. It'll probably get another rejection at Friday's high.
Yeah. But if this node of resistance here, if we can get through that and that becomes support, then I'm starting.
Then you don't want to be in that trade. Yeah. Okay.
Yeah. So anyway, just my 2 cents. Oh, and again, this is the area, remember, the afternoon pullback low down here that we're really, that is my main thing I'm looking at for today is this. If we get below that, then I start to think differently.
Yeah. So to me, that would be the overnight low. To get down to that swing low, they'd have to get below the overnight low and get new selling to be able to keep it going to get down there. Yeah. There you go.
And then my next, so, and I'm still obviously keeping my eye on this. Will have to get repaired at some point too. So, and it's likely just because we got that bounce, because this is now not just poor, it's weak, right? Because it's at the same level as the overnight low. So it's very likely that the market will at some point today come back and repair that.
Mm-hmm.
But yeah. And
but not without going sideways for an hour first.
Right. 2, 3.
All right. Let me share my screen again. Okay.
Yeah, Charles, maybe we can take a look at some of the order flow around that fade trade.
Oh, okay. Yeah, let me pull up. ZQ.
Here we go. We're about to.
Yeah, so I mean, there's a wall, hit into a nice area of liquidity just below the 21,600 there. And there's a little lower too, but yeah, that area there.
Yeah,
and
came in there,
buying coming out,
filled it, bounced, and then that was the move.
Yeah, and then we're starting to come right back down to retest it again. It looks like here. So,
well, yeah, because now looking at the Q on the Bookmap, it's like we got this giant node of liquidity at 21,562, which is that area you were just talking about, right?
Exactly.
That's that reversal area. Yeah. So they want to test it today. They want to at least poke it. My guess would be if the market comes down there to 21,562 and then that liquidity disappears before it can fill, the market will probably just shit right through it and head lower. If it sits there and it bounces into it, yeah, we're going to chop all day. We'll come right back up.
The other thing is, if you look on the cumulative volume on Window Trader, there's no real support there. I mean, there's not a lot of volume. I also look at large volume nodes and low volume nodes. So it could really, like you just said, it could go through that area pretty quickly if it does start to liquidate.
So this is a way in real time, guys, that you can use the Bookmap to your advantage. That liquidity is there. So what happens to it, right? Let's say price turns around and starts heading back up towards Friday's high. Does this liquidity start to disappear or does it stay there? If it stays exactly the same where it is, whatever's been happening so far, which is consolidation, right, is going to keep happening. So you're probably going to look above Friday's high and fail and come back in. But if as the market is working its way towards Friday's high, this is slowly getting thinner and thinner and thinner, and there's less here, they were just trying to pull the market into it earlier in the morning, but now it doesn't matter. As it gets thinner and thinner, we ignore it and we trust the momentum up. All right, let me get back on the ES because I think we're going to test the chop zone low, which is Friday's low. And then we'll see what happens there. Do we get new selling or do we reverse right back up through the opening price? Oh boy. Yeah. Right now, Bookmap on the ES just looks like consolidation. There's so much liquidity on both sides. They want to grind it.
Quite a bit there on the offer though, below the figure. So let's see if there's buying interest to test it, or if sellers come in and it dips lower here. To me it looks like it wants to dip lower here.
So
yeah, there's
when you're looking at these large nodes of liquidity, that are above price, right? How do you differentiate when the sellers will actually step in or when it's going to spoof? Do you just not know till it gets there?
Well, it's more of like that context, the C word, really. Between the aggressors and like right now, there's very high liquidity there, and seems to be some appetite to trade with it, to tangle with it. So. We will see then the outcome, or a lot of times when you get high liquidity like that, the context is it repels price There's a wall of sellers there, and it's, everyone's looking at it and thinking, well, okay, I don't want to tangle with that, and I am not interested in buying. And they just kind of step away, and sellers take it down to find buyers at lower levels.
Mm-hmm.
So right now it's a little, it's kind of hard to read. I mean, I would say like there's more liquidity on the offer for sure, and it's below the figure, and that's kind of bearish. But we just saw they're kind of, we're getting a kind of mixed context now. But I mean, we traded into that liquidity. The way you have your volume dots set up in Bookmap is we can't really quite see, but now there's support at 92.5 there, or some demand there. Let's see if the sellers trade into it and through it. If they can, then I would imagine we're gonna head lower.
Sure feels that way. Dun dun.
Yeah. See, now they're pulling there. So let's see if the sellers can, hit
Poke
the bid
through
here.
Yeah.
Yeah.
Very exciting. Second by second. So have you found, Bruce, because you've been watching Bookmap for years now, how different would you say the stuff we're seeing, the changes in order flow and with the icebergs and everything else, how much different would you say it is now from like a year ago? Is it just a minor difference or is it a big difference?
What, in terms of the stops and iceberg activity?
Yeah, just the type of activity. Because to me, it feels like the markets are changing. It feels like the markets, the way they move right now, is not the same as they did a year ago. Like, I feel like the mechanisms are changing and the patterns are changing. Maybe I'm too zoomed in as a day trader, but it just seems to me like, yeah, just very different than it used to be. Do you feel that same thing, or am I crazy?
I don't know. I mean, I kind of like, the process I just went through here is the same thing you see all the time. I think what you were talking about earlier, kind of like your bigger picture outlook, is more kind of how I would look at it and engage that kind of feeling. So like, well, look at maybe some of the reaction to some of the data and the news, and how are traders, like, what are their reactions to that? Because here we are, like, up at all-time highs, and we have a new president elect. We have a strong dollar. We have confliction here between potential policies on tariffs, etc. How are the markets reacting to these things? And that's kind of where I see the shift. I guess it's more fundamental. I don't really see it. I haven't really seen it in the order flow much, though, to be honest.
That's so interesting. Okay. I feel like I see it in the order flow. I feel like I see it in the way the market pulls orders and puts them out and pulls them and puts them out. I feel like it's gotten a lot more rapid.
Oh, okay. So yeah, I mean, that would be just kind of environment of a lot of participants aren't really sure what they want to do. Yeah, I would agree with that. Yeah, so here we go. And it's kind of testing. Are we going to find our sellers interested in a kind of an impulse move here and taking this down?
Mm-hmm. So Lady D, I know you're looking at the Q and not the ES, but if you were trading the ES, it's bouncing right now, a point above Friday's low. It's just bouncing and bouncing and bouncing. Would you want to have a contract in at Friday's low right now? Or would you have the feeling like, oh, we're so close, it's going to crash through?
Well, unfortunately, I can't see. I can't see your screen for some reason. So I'm not able to see
lost.
What you're talking about. So
yeah, it's like this is exactly the type of reason for the audience who can see the chart. This is exactly why I hate trades like that in the first hour, where like the market opens, I put a limit long right at the previous day's low. I put a limit long right at the overnight low, because the fact that we're consolidating right on top of it Doesn't mean it will happen. I'm not saying this is what will happen, but there is a chance that we just go break through and then and we just continue to head lower.
There is, but remember my trade setup is just for a short scalp, which would have been filled immediately. So I'm not worried anymore because I'm already out of my trade. So
so you're saying in this scenario you would just get stopped out.
I do it every time because I know statistically it works.
Yeah.
Like 73% of the time or something. So I just take it every single time. And yeah, it doesn't always work out. Like I have a stop in place, and if it doesn't work, I'm okay with that,
Okay. Come on, market, make a move now.
So, Lady D, I'm kind of curious. So, you're just basing it off of just the previous or the overnight low, and that's it.
Yeah. So he said, Lady D, you're just purely basing it off of the overnight low.
Yeah. Like in the A and B period, I'm only looking at major reference points for short scalps. I'm not taking, long trades, unless there's a gap, then the situation changes. But
yeah. So Bruce, what she's saying is there is this thing that happens, okay, where a market will get right to either the previous day's low or the overnight low, and it'll bounce right there. And this bounce may only last a minute, right? It's just like there's always a quick little bounce. There's always some liquidity sitting there waiting. And so she has an order in, gets that bounce real quick. Do you move your stop above your entry?
No, because I'm just scalping it. It either works or it doesn't.
So your take profit is only a few points away anyway.
Yes.
Okay, I see. Yeah. So she's every day just always taking that trade, and it works 70% of the time. So she's just she doesn't care the 30% of the time it doesn't work, because the 70 it does pays for it.
Because I know even if it doesn't work, like the rest of the day, I'll make that back super easily. So I'm not concerned about it. To me, that is better trade than, it's gambling in the A and B period. If you open inside the previous day's range, it's just, retail traders taking each other's money out of each other's pockets. So I don't really, I'm not interested in any big trades until we break the IB and I see what the directional bias of the day is going to be.
For shizzle.
Okay. Interesting.
So yeah, we were consolidating, and now I think that consolidation just became support. So it's looking more bullish on the NQ for the moment.
Yeah, I don't trust this low. I feel like we need a...
Yeah, it's definitely super weak and poor, so...
Oh, yeah, looking at the NQ, man, that is very weak.
It'll come back at some point and take it out, but if you don't have a large account, you can't necessarily wait that out. So that's why...
Yeah, nor would you want to. You wouldn't want to be shorting now for that to come back down, because if it pops above yesterday's high, it could take off, and then you're taking all this extra risk for nothing.
Exactly.
Chopping broccoli.
Charles, I'm kind of curious, like then. And it kind of relates to what Lady D was talking about, like her fading trade is that's really straightforward. But you are outlining some of the strategies that you're looking for, and if it doesn't materialize, you're not going to trade. Do you ever take any kind of like trades though from the inside out? So you see, like, just, I don't know, maybe like right now, potentially, there's a lot of liquidity on the offer and at lower areas again and again. If you see a tremendous amount of selling starting to move, will you take that and then trade it to the outside edge and try to hold it for maybe an impulse move that breaks the lows?
No, because I've just learned that, so for me, the first hour of the day is a unique thing that is different than the rest of the day. In the first hour, if before the opening bell rings, I don't already see an opportunity, see an edge, I don't mess with it. Because what I have found is, if I do what you're saying, so let's say I were to short right now, I were to say, let me sell resistance at 94, right? I'll put my stop above the high. So I'm taking, the opening price. So I'm taking like 4 points of risk, and I'm targeting a move to the overnight low, which is, more than 11 points of reward, 12 points of reward. Okay, great. That's a great trade in terms of risk reward. It has a pretty good probability of working out here today, but I don't have enough confidence in it to get into the trade. And the reason is because if it goes and stops me out, that's going to fuck me up psychologically for the rest of the day. I do not trade as well after losses as I do after wins. So for the first hour of the day, my number one goal is just don't fucking get in a losing trade. Just make sure that first trade is a winner, because psychologically that sets me up for the next one and the next one. So I want to be very, very cautious. And so, for example, in your scenario, let's say the sellers poke down below yesterday's low. We start to get new selling down there and it continues lower. To me, I'm perfectly fine with shorting there and making that money rather than getting short ahead of time and making that little bit of extra. I'm also fine with missing it altogether. So if it comes down there and it gets resistance and I don't trust it, so I don't get short, that's fine if I miss the whole trade. I would rather one of those two things happen. I take the trade and make a smaller gain, or I don't take the trade at all, than to take the trade and take on a loss.
Okay, excellent.
Charles, I totally agree with you on that. I have the same philosophy about being super careful my first 2 or 3 trades of the day, because I have a rule. If I lose the first 2, I have to stop for the day. So that makes me extra careful, generally about what I'm doing in the A and B period, because exactly like you said, you want to be set up for.
Yeah, I think this is one of those things we always urge people to do it, and very few actually do, but you have to track your trades. You have to keep track, not just of like literally, I went short because I saw resistance and we had a weak low or something like that, but psychologically, like, why did you get in that trade? You know what I mean? Like, what was it that made you want to get in that trade? If it was FOMO, if it was like, I have to trade, I need to be in a trade, I'm going to miss it, those are never good trades. And in the morning, most of the time, that's what it is. When you're in a choppy market and there's no guarantee and everything's all over the place, really, it's just a desire to trade that's making you want to enter that trade. So if you track it and you notice the results, how many times do I enter a trade because of FOMO? And then what are the winners and the losers? You'll find you probably don't trade as well in FOMO. So you have to create rules to never do that,
I mean, that, like, Charles, you just hit it on the head. I mean, that's, I think, what most traders, beginning traders struggle with the most, is not understanding the discipline it takes to formulate your trade plan, back test your strategies, know the percentage of probabilities, how much they work, so you can focus on the ones that work more than the others, and then be disciplined. Because I can't tell you how many times it's happened to me where I think, oh, this one time I'm just going to go rogue and take some trade because it looks like it's going to go this way or that way. And then it always like loses or wipes out a good percentage of my account. I'm just like, if I just stayed disciplined with my strategy, this wouldn't have happened. And yeah. I think that's what took me the longest time to figure out, is like, don't deviate from the plan that you've back tested, you've researched, and that works, because that is just not a good idea.
Mm-hmm. And it's something that I still fight every day. It's not like I magically overcame the desire to FOMO trade and now I never feel it anymore. It's like I have to every day remind myself. But the nice thing is, I'm at a place in my trading where when I ignore one of my rules and I lose money, it's like I know instantly that's my fault. I shouldn't have done that. I knew better. And so then it's like I won't make that mistake again for a while.
Yeah, for a while. Exactly.
Give it a couple months and then I'll forget about it and I'll do it again, but I'll learn it instantly.
I even have, you can't see it because my thing's blurred, but I even have a quote on the bottom of my trading monitor that says, train your brain to take one action, train the neural pathways. Charles, you talk about that a lot in your class, how repeating the same action is kind of like the book Atomic Habits, right? Like I think it takes 21 days to form a habit. Like if you keep repeating these actions and you keep making them more precise, it's kind of like when I practice my instrument, right? I mean, I practice hours and hours a day, and the better that I get, the margin of how much I'm improving for the same amount of time, like reduces drastically, right? I mean, I could practice 1 hour to fix some teeny detail that 90% of the population doesn't hear. But because my level is so high, like that's just what I have to do. And that's why I feel like there's so many similarities to the mentality it takes for trading, or athletes or musicians or artists or dancers.
100%. That is the name of the game. And the other thing about that is, you know, what most people don't think about is the fact that your frontal cortex, right? So the part of your brain that's actually like logically thinking and processing information, that is the most like energy using thing in your body. Like it requires a lot of energy to think, to process thoughts. So your brain creates these neural pathways to shorten that process. So it doesn't have to critically think through every little thing. So like, for example, you know, when you go to, you know, wake up in the morning to turn off your alarm or whatever, you know exactly where your phone is. It's in the same place every day. So the second that your ear starts to hear the sound of the alarm going off, your body automatically knows, like, okay, lift the arm, move it to the left, you know, this far, reach down. That's where your phone is. And so it's like, you're not actually thinking all those things. You're just like, oh, fuck, my alarm's going off. And you're just doing the action of picking up the thing and turning it off. Well, that same thing happens to you in trading, where if you repeat patterns, let's say patterns where you're losing money, if you repeat those patterns, your brain just automatically does those things. It doesn't critically decide each time, oh no, I shouldn't get in this trade because it's a FOMO trade and I'm forcing it and da-da-da. It's just like, oh, here's the trade, get it? And it just does the thing. So you have to be meticulous with your practice, so that you're forcing your brain to learn the right things, the good habits. And the more you do it, the easier it becomes to do the good things. But it's just like learning a musical instrument. You got to just put in the hours.
And isn't that called chunking? When you've done it so many times, it becomes second nature.
Exactly.
You're
yeah,
like chunking all these little pieces of information to make one action. It's kind of like when I have to play concertos with orchestras, you know, I practice and practice and practice. And when I get it memorized and everything's perfect, then, you know, in a way, it's like it's sort of just on automatic pilot. I've done it so many times, my fingers know where to go without me. If I overthink it in that level, then I mess up a lot. Like there's a point where you have to let go and trust that you've done the work, you've done the research, you've done everything you needed to do this at a certain level. And then at that point you have to trust it and just let it go. Right.
Mm-hmm. Yeah. That's what people don't understand, is that the hard work for the musician is not the moment they're on the stage doing the performance. That has its own challenges, but the hard work is the preparation ahead of time so that when they're on that stage, it just flows and they just do they know the right notes to play. Is this how you play the flute? Does this look right? They know what to do. Right. And so then they can do it well. The same thing is true with trading. If you practice properly and you build that skill set, the on-stage moment is when the market is live and you're trading. You just kind of know what to do, and you can trust those instincts as opposed to the natural instincts we have to force trades, to get out of winners too early, to let losers run too far, all those natural habits that, you know, you just really have to overcome.
100%. I was just reading the Market Wizards while I had a rust in the Nutcracker this weekend. And I thought this was really interesting. They talked about Steve Cohen and his hedge fund. He had a full-time psychologist on staff there to talk to his traders. And music too. I had to train with a really famous sports psychologist who trained Olympic athletes and things like that. And I thought it was interesting that he understood the importance of keeping your traders in a mental place where they're functioning at the highest level. Optimal performance is what they call it. So it, you know, there's a psychological aspect too.
100%. And it's in everything. It's not just trading. I mean, you know, if you want to be on the Olympic team of whatever sport, like you want to get that good at it, it's more than just learning the sport. It's more than just learning, you know, whatever the rules are of the game. It's about that peak performance, that like you at your absolute best that you could possibly be. And I think specifically for day trading, you need that. I would say probably not as much for like longer term investing and stuff like that. But for day trading, you got to be at peak performance every day.
Yeah, because you're competing against the best, minds in the world. It's like the Olympics every day, right?
Exactly. Yeah. It's a game every day. Like it's game day, you know?
Game day. There's a great book actually, Charles. I don't know if you've heard of it, called Flow. It's an older book, but it's so great because it talks about how can you actually learn how to tap into that state of flow where you're doing your best without really thinking about it, and you're not making the kinds of mistakes when you're overthinking everything or you're too analytical. It's like letting it flow, reaching the state of flow. Like the greatest performers all know how to tap into this effortlessly, right?
Mm-hmm.
So this whole book, it's called Flow, and I think that the author's name is Mikhail Csikszentmihalyi. It's a really hard last name, but it's a fantastic book. It like changed my performing career once I read that book.
Mm-hmm. Yeah, I know that book. It's great.
Yeah, it's
And it
really
is
good.
something I notice in my trading too. A lot of times, like if I'm feeling pressure, like I'm like, I got to make money. Maybe I had a losing day the day before,
Yeah.
or we're getting close to the end of the month and I want to withdraw some money to pay my rent or whatever. It's like, I'm just like feeling pressure to like trade. I'll trade worse because you can't really get in the flow state when you're psychologically affected like that. But then like, I'll take a couple of winning trades. I'll know I'm good. I've made back my losses. I've got enough money, whatever. And then I get in the flow state. So it's like I take a couple trades, I go, I get a cup of coffee, I come back. Now all of a sudden it's like, oh man, the market's so easy to read. Like, oh, I enter here and I take profits here and it's so frustrating that it's all psychological. That switch psychologically changes the way I see the market.
Yeah, totally. That is such good advice.
All right, guys. Well, we promised balance. We promised chop, and we fucking delivered.
Yeah. Great discussion. I'm sorry, I need to go. Actually, it's my shift for the webinar. So I will leave you guys. But very nice discussion, and great to have Lady D on. Thanks for coming.
Yeah, thank you, Bruce. Anyone that wants to, head on over to YouTube to watch Bruce's stream. And yeah, thanks for coming.
Discord or YouTube. Okay, all right. I'll take care. Bye.
Bye. All right, Lady D, I'll say goodbye to you as well and head over to the Brigade stream. Thank you for coming on.
So much fun. All right, as always, I'll talk to you soon.
All right, have a good one. Goodbye, everyone. All right, and we are out.